Hello, I'm Cindy Fornelli, the Executive Director of the Center for Audit Quality, and I'm pleased to share with you today the results of the CAQ's 2015 Main Street Investor Survey. In the aggregate, our 2015 survey results paint a fascinating picture of the American retail investor. Despite sometimes nerve-wracking fluctuations in the marketplace, our survey shows that U.S. investor confidence is resilient, a positive sign given the importance of financial markets as engines of economic growth. The findings on all of the U.S. confidence measures are strong, starting with the 73% of investors who indicate they have some, quite a bit, or a great deal of confidence in U.S. capital markets. This confidence cuts across generations and geography and continues a steady climb that began in 2011. Why are investors confident in the markets? The top reasons cited are a general confidence in the strength of the market system and capitalism, as well as experience with their own investments and historical stability of the U.S. markets. This year, confidence in investing in U.S. companies registered at 78%, just off last year's high of 80%. Confidence in audited financial statements also declined slightly in 2015, but remains at a robust level of 71%. Confidence in capital markets outside the United States, however, took a hit this year, dropping to 38%. That's the second lowest reading on this measure since the survey was launched in 2007. Not surprisingly, investors cited the debt crisis in Europe, and specifically Greece, as cause for concern, as well as a general sense that the global economy is not stable. When it comes to the entities investors trust to look out for the interests, independent auditors topped the list again this year with 76% expressing confidence in auditors. Financial advisors, stock exchanges, and audit committees also ranked high. Moving on now to the special focus of the 2015 survey, the investor of the future. The survey revealed that in many respects, millennial investors do not look much different than the broader investing population. By and large, they are confident in U.S. capital markets and key capital markets players. We did, however, find some interesting differences between millennials and the rest of investors. Millennial investors are more likely than investors nationwide to have confidence in non-U.S. markets. 43% of millennials express confidence in markets outside the United States, compared to just 38% for investors nationwide. This year's survey also probed investors on their appetite risks. And while most investors nationwide describe themselves as pretty cautious, we noted a greater willingness by millennials to assume risk after completing adequate research. 35% compared to 26% of all investors. Survey respondents were also asked how concerned, if at all, they were about potential risks they confront as investors. Too much government regulation topped the list of concerns for all investors, followed by geopolitical instability. However, for millennials, the number one concern is cyber attacks targeting their financial information or the capital markets. And now for the $10,000 question. From a list of options, we asked investors what they would choose to do if they received an unexpected $10,000. Most investors would not invest the windfall. Investors resoundingly said they would use it to pay off debt. Millennials in particular chose that option, 38% compared to 31% of all investors. With nearly a decade of comparative data, this survey provides a unique perspective into the minds of U.S. investors as they've navigated through one of the most turbulent financial periods in U.S. history. For more information about the 2015 survey and its results, please visit our website at www.thecaq.org. Thank you.